Hi there. Hi there. This is Dennis Wells with the Wells Funding Group. Welcome to the Financial Advantage powered by the Wells Funding Group. We are so glad to have you here with us today. We're super excited to be talking with Andrew and Aleks. They're with Keller Williams Preferred, but they specialize in flipping and investing and all the kind of radical side maybe of real estate, kind of on the edges there. So looking forward to getting to hear what you do and how you do it, and how you're thriving in that niche. So welcome to the podcast today.
Thanks for having us, Dennis.
Yeah, it's great.
Absolutely. So how did you all get started in real estate in general?
You want to go first, Andrew?
Sure. So I was working as a graphic designer, and I always thought there had to be a better way to make the level of income I wanted to make. I quickly realized it would take me a few thousand brochures to design a month to get to the level of finances that I wanted to. So that kind of started me down to look at other avenues of money. And as I narrowed down my list, real estate just kept being at the top choice. And then once I made a decision to get into real estate, I started studying and networking and telling people that this was going to be my new career path. And I ended up flipping a couple properties, which led to me getting my broker's license. And then a few years into that, I got back into investing full time.
I love it. Aleks, how about you?
Yeah, so my story is slightly different. I start as a scientist, work 15 years in medical field. And all my life, I really enjoy seeing old houses and really bringing back that old glory. I'm really very passionate about that. So when the big crisis started, 2007, 2008, I literally, by studying the market, took advantage of and started buying my first rental properties. And that's how officially I become a real estate investor. And during after a couple years, let's say like that, I really wanted to get my own license and really get a little bit more time because I become a mom in the meanwhile. So flexibility in working hours was like a key. As Andrew said, like real estate by default can provide a really decent financial freedom. So that's how I start selling the real estate and still continue doing the flips and the rentals.
Yeah, I love it. I love it. So you got into the real estate. So Andrew, how about you? How did you so you just saw flipping as an opportunity to be able to, grow your investment portfolio?
Pretty much, I just wanted a job at that point that paid better than what I was getting. I didn't really know what I was getting myself into, but I told myself whatever I'm gonna do, I'm gonna go all in on it. So I mean, I never even had owned a home. I actually flipped a house before I ever owned my own house. So I mean, I was starting from scratch with like terminology and like just the language of real estate because I didn't understand that. And I didn't have any credit and I definitely didn't have any money, yet I was really determined to figure out a way. So I started really digging into my network, and I had a family friend that is one of the main people here at Keller Williams. And then I was presented like an opportunity for a property. And then from there, I was able to go into my network and raise some private money to fund that deal. And then that kind of gave me the structure of like how my investment stuff would go forward.
I love it. I love it. You may not know this off the top of your head. How many houses have you flipped over the course of your career here?
Well, in the last five years since we've been together, it's about 20. And then we added, we're at like 14 rental properties.
Yeah, I love it. I love it. And Aleks, to your point, I think it's huge to be able to, take something, especially a house that is not performing, and be able to, use your expertise, use your talents and your gifts, and take something that was not working and make it work. and to better the community. What are your thoughts on, elaborate a little more on that?
So first, like I really believe in the BRRRR strategies. What is the buy, rehab, refinance, and rent it out. I'm seeing that as a giving back to the community, because a lot of, especially Chicago neighborhood, there is a lot of abandoned houses. What by default they can bring a really unhealthy environment, let's say like that. And none of the people really enjoy having abandoned houses or the bad looking. So once you start rehabbing houses, yes, you're helping your own business, but what are you doing for the community is really bringing a value back. So maybe some of the people looking to move, they maybe get a new job or downsizing, upsizing. So they really wants to sell their own house for the max possible dollar. And by our job in putting back into these old houses and bringing market up, so we also helping indirectly to the whole neighborhood so that everyone actually really can benefit with that. Another thing what I will add is like really in real estate investment, you should not have any attachments. It's really everything are the numbers and being willing to move if the house doesn't perform anymore. So there is the ways that you always can be, you actively needs to search and really analyze the market and really making executive decisions. So that's kind of giving you on the front line and really able you to make more money and be more financial free to do with your life and your time. Because I really believe that with money, you really can buy a time. And with that, you can do whatever you want.
And Dennis, I'll just add, like when Alex was mentioning improving the community, our slogan and like how we live by is we provide quality homes for quality people. So a lot of times the tenants that we end up putting in place are very grateful because they're, high performers at their job. They have good credit, good income, and they're coming out of a situation where their landlord didn't fix anything. They weren't being taken care of. They might be coming from a rougher neighborhood and it got a promotion. So we're really mirroring like providing great housing opportunities with integrity and managing them with integrity. And then, from an investor standpoint, it's great when people say 10, 20 years, but as agents, we kind of get to be a bigger part of their life because when they are quality tenants and have good jobs, good credit, usually home ownership is a goal of theirs. So they may be in our properties from 2 to 5 years. Well, they clean something up or, their kids might be leaving school and then they'll buy after that or whatever their situation may be. But what's cool is then we get to like know them as people. And then when they're time to take that next step, we already have that built-in relationship. And now we can go from like, providing that house to helping you on your journey of owning that home. So that's been pretty cool.
Yeah.
Yeah, I love that. And that you're not only transforming, neighborhoods, but you're transforming lives and, providing that pride of ownership or, the pride of accomplishment to be able to be in, maybe it's not the house that you're going to be, living in long term, but something that is certainly a step up from where you are and helps to broaden your vision for sure.
Definitely.
Now I've heard it said that you make money on investments like that on the buy. Can you tell me a little bit about that and maybe some pitfalls that you've seen other investors or flippers, run into from time to time?
We can say that the last like 3 to 4 years, it was very fortunate for the real estate business per se. So a lot of people who decide to do investment, there was like really lucky effect of appreciation, what is not, I mean, in the last 2 years, in the one point, we had a 10% appreciation per month, what is really not usual and it's not standard in real estate. So that being said, like we have situations that people will buy the house without making really analyzing for how much they should buy it, then they will just fix again the free range, how they think it should cost, and then hoping for selling for the best possible outcome. What really happened that they were lucky because of appreciation, so they will still making money. With the current market, it's really important to find a property with a purchase price, what's really approve that purchase price. So the process is you first analyze for how much you can sell it, then you already see the like the house, you know what is the cost of that, and then calculate for what is your maximum offer price. And I think that right now with some relatively new investors, that's not the case, because we have a few times our clients who would buy excitingly some houses without even letting us know, and then they will put some money in it what really doesn't justify the sale price, and then come to us and said, oh, I want this house to be sold with X amount of dollars. And I was like, well, doesn't working that like, so we are not dictate and we are not the market, so we will see how that goes. So, and Andrew probably can add a little bit more in that funny stories what we experience.
Yeah, I mean, generally as a rule of thumb, I advise and personally look for things at least 20% off, like the market value where it is today. That way you're already buying with equity. When you acquire the property, especially if you're like fixing and flipping, it really kind of gives you a cushion if you carry it longer than projected, if you go over budget projected. It's just really that cushion to where if anything happens, you already have, say if you bought it for 80 and it's worth 100, you kind of have 20K already built in case something happens. And if you execute properly, it's just enhancing your spread on the back end.
Okay. And what I'm hearing you say that is if someone's wanting you to sell their house after they flip it, they might want to come to you first and talk about.
No, definitely. Like I have that one particular client who they're like two partners, and one of them gets too exciting, and they was like thinking that because it's a certain area, it was a good price. So then when I hear for how much did they bought, like they thought they will save on the commission. I was like, even if you pay me, not a salary, if you pay from your pocket, you will still save at least 30 to 40,000, because there is no money to flip. Like there is nothing to, like, you really have to just maybe paint and maybe put the new tiles if you have a little bit more. Definitely not. And the people don't think that way. Like if the people use us as agents, we always support them through their real estate investment journey. And one of the things what Andrew said, we are looking for the lower purchase price on the first purchase. But then also when we are analyzing, we want to be sure that all their work is about 25 to 30% below the sale price. That's guarantee in case the markets shift. In case like if they're refining, the bank will always refi to the 75% of the market value. So that's very important when you are calculate the numbers that you are fully protected, because the goal is that people don't leave their own money in the property in case if they're renting out and keeping for hold.
Yeah, I love it. So are you all a part of any kind of investment groups where you get together, mastermind, talk about opportunities and where the market is heading?
Yeah, so we're a part of two different communities. We're a part of a local Chicago investor group, Chicago RIA, and that's just a bunch of like-minded investors and lenders that are all coming together. What I like about that community is it's people actively doing deals and not like a sales pitch for education and you're actually doing stuff. So I like that. And then we're also a part of like a Keller Williams wealth mastermind, and that's like a PhD in wealth education that is outside of real estate, but then everything is tied into real estate. And that's with like a bunch of top performers. We get together once every 3 months, and it's really great value.
Yeah, I love it. I think it's super important to be able to mastermind with like-minded people and be able to bounce ideas off of folks, and through the mastermind, everybody ends up with new ideas, new perspectives, and an opportunity that maybe they didn't see before, for sure.
Mhm.
I mean, everyone is different, and I'm really true believer that like 5 people who you communicate the most, who are really your closest friends or people you communicate on a daily basis, you are the average of these 5 people. So that's
Mhm.
why it's very important that you have some communities of the like-minded people so that you can really share and grow. And sometimes, especially with people who would love to invest in real estate, they have same friends, and then there is a fears. And even if they have the best idea and really, really great plan, then it will be at least 3 friends or 3 people around them who will start talking them away from, and they actually never in performance. And then maybe a few years later, they will be like, oh, I should do it. That was really great. But
Mhm.
then opportunity is gone. So that's something what people need to be ready and willing to really execute what they have. And of course, having a people around them who knows what they're doing and really have that team or community what they will support, like each other or support their plan.
Yeah, yeah, I love it. I think that faith and belief tends to foster more faith and belief. So when you surround yourself with those people that maybe they don't know exactly how they're going to do it, but they know what they want to do, and you surround yourself with like-minded people. When the student is ready, the teacher shows up, kind of a deal.
Yep.
I had also like some people, and I would really love to put that out. Few people, I talked to them, they was like ready, they wants to do the real estate investment, but on the end, they're always waiting for, because they wants to educate themselves. They don't know enough. And I already told them, and I can say to anyone else's advice, if you don't know anything about real estate, find the people who knows. Because if you have a really good real estate agent who knows how to calculate the deal, if you have a good attorney and you have a good lender or way to finance that, you really don't have to be expert. I mean, it will be the same thing. I need to study the law before I do anything. So that's why we have attorneys, or that's why we have a CPAs or doctors. Like, can you imagine that you first study all the illnesses so you can treat yourself? So that's how pretty much now people approaching to real estate, they really expect to be expert before they do something, because of that fear. If they're investing their own money, the gain can be big, but the loss can be big too.
Yeah.
And that's what they are kind of in that like a fear mindset.
Yeah, yeah. Sometimes people, I think, want to wait until like all the lights are green before they leave their house. And how it usually works is, you take that first step and then you see where the next steps go. And you're not just like, you know, without wisdom taking steps. So you take a step that and you have people around you that, every step that you go, you see the next step, you see what's going on, and then when you're done, obviously you look back and it's like, okay, well, it went pretty good. If I was going to do it again, I would do this, this, and this. But that's how we grow and learn, and anything in life, whether it's, lending, real estate, that's how kids learn to walk. So.
Yep.
I mean, even for us, like after like a 20 flips and like a 14 rentals, what was pretty much as a flips because we had to fix them. we always reflecting after the finished job, what was done well and what's need improvement. And to be honest, is always something new and always somebody else figure out something new. So you always can implement and be more effective. So there is no that end goal and to say, okay, I'm doing this like this to the rest of my life. You're always looking back and just look what else you can improve, where efficiency can come.
Absolutely. Absolutely. Where do you all see the market moving in the next 3 to 5 years? You know, whether it's in the flips or investing or in regular residential real estate?
That's like $1 million question, I would say. I personally really believe that we need first to see election and election results before we even predict anything. What I can say, the people made the money in the best market and the worst market. So that's why I'm saying don't be attached to the outcome. Readjust yourself, be flexible, and analyze the market, because every market have opportunity of making money and really doing well. Even like in the Great Recession, when tons of people lost all their life saving, and we know how devastated was that. There is also a group of people who made so much money during the same year. So it's never, I personally never likes to look, oh, market is bad. I always looking on how I can adjust and what the new market offering. So that's my philosophy,
And
real estate investment.
yeah, I would say we're still at a shortage of inventory, and we're not getting homes built as fast as we need to like supply the adequate amount of homes to have a neutral market. So even last year, some months we were like 2 months worth of inventory over the United States, which is an extreme seller's market. If you're looking at a balanced market, it's about 6 months of inventory. Now we've kind of like slowly crept up to 4, but that took, over a year. So we're still in a seller's market. But if you look at like pricing values on the bell curve of like the average appreciation of 4 years, given how the last 4 or 5 years performed, we are so significantly over. I don't want to speak in not factual, but double digit over that bell curve performance, where even if something dipped 10% on average, we're still right at the curve level of where we should be on just like a normal trajectory of like 4% up year over year. So I don't see anything coming up personally where there's going to be some massive crash like there used to be. That had a lot to do, with like the type of integrity around lending that was happening, which a lot of things have been put in place since then to like prevent that. So if you have a housing shortage, there's always going to be people to buy, and there's over time there's still going to be appreciation. So I see the market is still being very strong going forward. And like Aleks said, once the election happens, we can kind of like reevaluate based on any new potential policies. But like where we're at today, it's still a great time to buy, whether you're going to be living there or it's an investment property. The good thing about real estate is people will always need a roof over their head.
Yeah, absolutely, absolutely. I'm a big proponent of having other investments besides your real estate, but real estate is really an anchor, because especially for primary residential real estate, like you're saying, people always need a place to live. If you're if you are living in your own house that you bought, the beauty of getting a mortgage is that you get the appreciation gain on the entire property, but you put a very small amount down. So you're leveraging a lot of that. Even a very modest, in this market, 5% return a year. If you put 5% down, you're doubling your money every year.
Yep.
And you get to live there. So.
And Dennis, I'm glad you said that, because even though like the typical home purchase for like your primary is viewed more as like a personal choice, I think as agents, we need to, as a community, start educating buyers on the finance of it, like where you said this is a doubling your money based on
Mm-hmm.
what you put down and what you're getting in gains every year. And every person might not understand like real estate investing, but they can understand simple math of if I put in 5 and get 10, that's a good deal.
Absolutely, absolutely. If I can put $1 in a vending machine and it gives me 10, how quickly can I put the dollars in the vending machine?
And how
You
many
know?
can I put in there?
Yes, yeah, exactly, exactly. And you know, and to your point, yeah, it's a totally different environment than it was in the crash, and it's just economics, you know, supply and demand. When people tell me, "Oh, I'm waiting for the price of houses to go down," you know, my question is always, "Well, where's the inventory coming from?" You know,
Yeah.
because unlike 2008, you know, more than half the people don't have a mortgage on their home, so they're not going to lose their house. Of the remaining folks, most of them have more equity than they have mortgage on their house. You
With
know,
low
there's,
rates,
yeah, with
very
low
low rates.
rates. Yeah. So yeah, I think real estate is super important. I think it's a key. I love what you all are doing in transforming houses and neighborhoods and literally, you know, changing the legacy for a lot of people.
Thanks. And to add what you were saying, Dennis, is like, where's that inventory coming from? That's what is great about flipping houses right now as an investor and as an agent that works with investors, because you're creating your own inventory then. So if you know that there's gonna be low inventory when you hit the market and you have a good home that's priced appropriately, someone's gonna buy that home because there's not enough out there. Like when you go on the market, there's not like 100 people that got approved that day in that area for that price range. When you get that first round of showings, say you get 10 showings in the first week, those 10 people have already been approved and seen everything in the marketplace for where they're looking at the price range and opted not to buy. So now if you come with a nice house that's renovated, priced appropriately, and they come in, well, this is way better than everything else we've seen at the same price.
Yep.
So that's how you can really get multiple offers, drive your price up. But it's great for flippers because if there's no inventory, you just keep creating your own.
Yep. Absolutely.
I will just also add, like, as you as a lender did, like for the buyers itself, like education wise, interest rate maybe will go down, maybe will not. I mean, it's such a huge speculations for like almost like a 2 years. What I'm suggesting to people, just simply buy it, because your mortgage is not your life sentence. You always can refi. If something happened and the interest rate really goes significantly down, you can refi that. The good thing is you already purchased your home on the certain price,
Mm-hmm.
and usually interest go down, price go up. So that's what the people don't seeing, that what's really like they're waiting, for example, price go down, what will really bring like a higher interest rate, so that people, it will not be that much affordable anymore to get the loan. So that's like, I'm always saying, grab the opportunity when you can. And then once you have that house, depend on the market, you always can either refi, you, if the market really bloom, you can sell it and move somewhere else. A lot of people have a different approaches. So I always saying people just take opportunity and buy it.
Yeah, we're telling people, or I am anyway, that, you know, right now you're locking in the purchase price of your house. You know, just like to your point, interest rates go up, interest rates go down. You know, we're trending down. You know, now we're not going to be, I don't think, in the threes, you know, ever. But that wasn't very healthy for the people that were on fixed income. They were trying to make money off of their safe investments. But we can fix your payment in 6 or 7 months. But what I can't do is give you back the $40,000 worth of equity that you're going to miss out on by not buying the house now.
Yeah.
And that's part of the presentation that we provide to our folks is like, you know, the areas that you're looking, here's what the, you know, historical appreciation is, here's what the anticipated appreciation is, you know, here is, you know, why it makes sense and how we can help you create wealth through real estate. I mean, you don't have to be a flipper to create wealth through real estate, you know, but you have to get in for sure.
Yep, that's 100%.
Yeah. Well, thank you all so much for joining me here today. I know that a lot of people are going to want to get a hold of you. Aleks, what's the best way for someone to get a hold of you if they wanted to reach out?
My either through the email is as.terpo@kw.com. They can also find us on the Facebook. That's like one of the, and we can leave the phone numbers. Is that something what usually the case?
Yeah, we can put the email, we can put the phone numbers here in the notes as well, for sure.
So
Yeah.
Is there a
I'm
good?
Andrew Weis on Facebook, Andrew Weis, Weis. Phone number is 708-227-6894. Give me a call or text anytime. Happy to answer any questions or help out.
Yeah,
All
my
right.
cell phone is 773-474-0705.
I love it. Well, thank you all so much for being a part. I want to appreciate everyone who took the time to watch and listen. Again, this is the Financial Advantage, powered by the Wealth Funding Group. You can reach the team and I at 219-230-8400 or wellsfundinggroup.com. Thank you all so much. I really appreciate it. Got a lot
Thanks,
out of our
Andrew.
conversation today.
For having
Great.
us for this opportunity. Thanks.
All right. Thanks. Bye-bye.